Hi, I'm Keon, a research analyst here with Lipper, and I'm here to speak to you about fund flows for the week ended Wednesday, May 21st. Overall, funds saw $13.6 billion leave their coffers last week. The Dow Jones Industrial Average was down 0.5% on the week in what was a volatile week of trading. The Dow experienced 3 days of triple-digit moves. Impacting this was the release of the minutes from the latest Fed meeting. As anticipated by the street, the Fed did not set a timetable to start to tighten monetary policy. The markets reacted well to this. The Dow bounced back 158 points the day the minutes were released. Let's take a closer look at our macro groups now. Equity mutual funds took in $2 billion for the week. This is their 21st straight week of positive net flows. Taxable bond mutual funds took in $1.8 billion on the week. This is their 20th straight week of positive flows. Muni bond funds had positive inflows of $535 million. While contradicting all these positive flows, money market funds saw $10.1 billion leave their coffers. Let's take a closer look at equity mutual funds now. As stated previously, they took in $2 billion for the week. This brings their year-to-date positive net flows to $58 billion. This comes on the heels of 2013, where they took in over $194 billion. And so, as evidenced by this, we can see that the positive investor sentiment from 2013 has carried over into 2014 for equity mutual funds. Let's move on to our next group now, equity ETFs. Quite contrary to the performance by equity mutual funds last week, equity ETFs saw money flying out of their funds last week. $9.6 billion left their coffers. The bulk of these outflows are attributed to 3 ETFs. The Spider S&P 500 ETF saw $4.2 billion leave. The iShares Russell 2000 ETF had $3.6 billion leave, and the iShares Core S&P 500 ETF had $1.3 billion leave. Let's move on to our next category now, taxable bond funds. As I stated earlier, taxable bond mutual funds took in $1.8 billion for the week, their 20th straight week, bringing their year-to-date total for positive net inflows to $52 billion. This is somewhat of a bounce back for them. They did have positive net flows of $17 billion in 2013, but this was coming on the heels of a 4-year period from 2009 to 2012, following the financial crisis, where they took in on average $233 billion per year. Moving on now, let's take a closer look at the taxable bond ETFs. Taxable bond ETFs took in $1.5 billion for the week, their 6th straight week of positive flows. The bulk of this can be attributed to one ETF. The ProShares Ultra 7 to 10 year Treasury ETF, or UST, took in about $1 billion for the week. Let's move on to muni bond funds now. Muni bond funds, as stated previously, had positive net flows of $535 million for the week. This is their 3rd straight week of positive net inflows. National muni funds accounted for all of this increase, as they took in $545 million. Moving on to our last category now, money market funds. Money market funds, as we stated earlier, is the other big category we saw significant outflows last week. Overall, they saw $10.1 billion leave their coffers. Contributing all of this net outflow was taxable money markets, which had $10.8 billion leave. Well, that wraps up our report for this week. If you'd like to take a deeper dive with the data, please join us at www.lipperusfundflows.com. Please join us again here next week, where we will discuss fund flows activity for the week.